Hello, welcome to the channel. So today is Sunday, May 22nd, and I want to take a look at what's coming up in the week ahead. Okay, so the starting point is I want to kind of look at what kind of economic reports are coming out, what kind of things could be going on. I think just first of all, I'll comment on earnings. We've had like thousands of companies reporting during the last several weeks. Now it's come off a lot, but there still are a few companies reporting, something like 50 a day instead of like 300, 500 a day, something like that. So there are some that are coming out. I don't know off the top of my head which ones are important or anything. I did notice like Toll Brothers was in there, that's home builder. So I don't know if we'll see anything interesting there or not, but just kind of something to be aware. There still is some earnings going on out there. Then on Tuesday, we get this IHS market. So here's your PMI, both the manufacturing and the services. And this is I think this is the diffusion index. So yeah, we'll kind of see what happens with that. I think the big question right now is that we had the negative GDP print for the quarter. And so the question now is people are probably trying to look to see if we're currently in recession, meaning that for the next reported quarter, the Q2, are we actually in recession? So I think people are going to be scouring whatever they can scour to kind of get a feel for that. And they may be looking in the PMI to kind of get a feel for, if the economy is slowing down and how much it's slowing down, that kind of thing. So I don't know what's going to happen there, but it's just something to kind of keep in mind. Then we go to Wednesday. Interesting here. A couple of things. So the mortgage applications, I mean, I assume housing is slowing down. I mean, it has to slow down with the way that rates have come up and everything like that. So I don't know if that's going to be a big mover. I don't think it has been, but it's something to see if like mortgage applications further dive. The other one would be durable orders. Now, durable goods are things that are more expensive, things that typically are more expensive, like a car, blah, 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 and things like that. So if we're in a recession or that's slowing down, that might be a sign of that. Looks like the consensus is for some growth in durable orders. So we'll see. Now, as well, on Wednesday, we get the FOMC minutes. Now, who knows what's going to happen, because if we get the minutes and what were they talking about? Are we going to see stuff where, were their members talking about like, well, we should raise like 100 basis points at a time. We should have emergency rate increases or, who knows what they're going to say. But that could be an interesting one. I mean, it could be something, something weird could come out of there. If it's all just the standard debating 50 basis points, 75 basis points, then it would be should be in like a non-event kind of a thing. But if there's stuff in there where there was like, oh gosh, like half the people were like, we should have gone a whole percent at a time or something like that, that might shock things. So we'll see. I mean, I'm not predicting anything. I have no idea. I'm just telling you, this is what's coming up. When it's coming up, kind of keep an eye on it if you're trading. Another one that's interesting here is on Thursday, we get our second estimate of the GDP. So what happens is we had this negative 1.4% estimate of the first quarter GDP that came out, and that's called the advance estimate. And then they can continue to update this. So we get the second estimate, and then the third estimate will be like a month from now. So what they're doing is they're basically just trying to hone in on that, get a better number. So it's interesting. They're showing that it improved a little bit. The consensus saying minus 1.3% instead of minus 1.4. So we'll see if for some reason it gets revised to something like -2, then that's going to be pretty horrible. I would expect a bad reaction. But on the other hand, maybe it gets revised to a positive number, or I don't think it would go that much, but it could go to like, oh, it's minus 0.5% or something. As that kind of happens, then maybe it could be viewed very positively. Hard to say. And then on Friday, we get our personal income and spending, and we get some trade data and stuff like that. So I don't know really what's about that, but the only thing to note, that's all going to come out before, in the morning before the markets open up. So that's the kind of thing for this week. It's really hard at this point to kind of like say what is going to be a volatile event here. I mean, maybe the minutes might be something, but on the other hand, the chart. So basically, we had another down week. So looking at the SPY, this thing is just continuing to go down. This was apparently one of the worst weeks since like in 100 years or something like that, because we had 1, 2, 3, 4, 5, 6, 7 straight weeks of down on the SPY. So it's a pretty big down move for sure. And then if you look at the Dow Jones Industrial Average here, see what we get. Yeah, it's down as well. And one thing to keep in mind too, when you look at the market, remember that the market is part of the leading indicators, and it's a leading indicator because it's actually a leading indicator. Movements in the market do reflect economic activity in the future. And that's, something to kind of keep in mind. We had our oil. Our oil is just really difficult, because it's compressing. It popped out, then it went back down, and now it's kind of working its way out. So I really don't know what to think about oil. I had some a little while ago, and then I'm like, I don't know what to think about this. If I look at the USO, the most tradable, easily tradable version of it, it kind of looks like it's still pressing up. If it could break out of this, really break above 84, that would be potentially, a huge breakout on that. But I don't know if that's going to happen, because I don't know if the EU is really going to end up banning oil at all, the Russian oil. I don't know if any of that's going to go through. I think they're finally getting some resistance on that, because it's like, look, it's going to be very damaging to the economies of the European countries to just do that. So I don't know if they're kind of like, okay, wising up on that. Looking at our wheat, it popped out of this triangle. And I guess this is one of those things, like a lot of these flags or these symmetrical triangles or whatever, when you pop out of them, they kind of come back. And so it kind of will be interesting to see if this thing is going to, basically, is it going to come back down and come back to a support area and continue to go up, or is it just going to, start breaking down? I mean, hopefully wheat will start going down. Hopefully it will start backing off, because these, food increases already causing trouble in Sri Lanka and in many other countries. And so this is just a disaster, a human tragedy coming up if it doesn't kind of settle down. Looking at like the Qs and stuff. Yeah, I mean, just everything's getting still kind of beat up. The only thing you'd say is that this still seems like it's very oversold, Looking at the RK, this one actually, the RSI kind of touched in there, into the oversold region, came out. And this is the kind of thing that can happen. This thing is, during the whole sell-off, if you look at it during the whole sell-off here, let's look at this guy here. Let's put this on. If you look at the whole sell-off going down, you can see that what the way it's kind of working is that gets oversold. It'll pop up a little bit, but it doesn't really pop up very far, and it continues to sell off. And then it gets even oversold more. It pops up a little bit, and then it gets, pushing down towards oversold. So, oversold doesn't mean that you buy it in the RSI. It doesn't mean that at all, because it's like the trend is down. And so you're trying to catch, if you're trying to buy at these oversold points, I mean, just look for yourself. If you try to buy it here, you maybe get a pop for a couple of days, and then it starts going back down again. So these are really, really short-term kind of trading things. Even here, oversold even more, and then it finally comes up a couple of days, but there's not really good moves. So it's very, very difficult to actually get like a profitable trade out of that. And when it's moving to the downside like this, and then here's an interesting one. Look, it didn't quite get there. See, the RSI didn't quite peak into that below 30 oversold, but then you got a good 4-day rally there out of it. So RSI is probably not really a good signal. It's really not. It doesn't seem to be. And this kind of is what you could do. You could take something that you're looking at, look at the RSI, see how it's trading, et cetera, and kind of get an idea if it's kind of like lined up with what the stock is doing, whether it gives you any kind of a useful signal at all. But in a down market like this, it's not really that helpful. And, you can kind of tell too, it's like spending most of the time below the 50. It's not even getting to the halfway mark before it starts turning down again. Here, it finally did. Here, we put in enough days in a row that it got above the 50, but still, it's a ways off. All right. So we'll see what happens this week. That's it for this one. Bye.